Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. If you pick up the phone and call us after the show with your questions, we can help you answer anything you need to know about either real estate or the loan business. Or maybe you just have a question as to whether you should do it now or wait. That's a favorite question of most people. That and if you have a good deal, give me a call. The main thing about when you make a decision on real estate, you have to want to do it. You have to want to do it for one of two reasons. Either you think you're going to live there for a long time and you really want to, own this property, doesn't really matter, or you're looking to sell it or turn it into a rental property so that you can make some money on it. Two things you really want to do with real estate, right? Unless you want to buy for your kids or you want to buy from me. And if you do, that'd be awesome. But short of that, those two reasons, there are questions that you're going to need to have answered. For instance, if it's a rental property and you're out there right now trying to decide whether you, by the way, there were like 3 or 4 deals that came across my desk this week. They were all by loan officers who work at Malibu Funding. Malibu Funding is the company that sponsors the show each and every week, and they employ me. Their NMLS number is 79620. So these were 3 and 4 unit buildings down in LA. I guess there are a lot of these on Adams, over near the stadium where USC plays, the Coliseum. There's a lot of these type of 3 and 4 unit buildings on small lots, 5 to 7,000 square foot lots, which is a typical city lot, right? 150 by 50. That's usually what it is. A little larger, a little less. But they were just terrific bargains and not all that expensive. If you're getting a 2, 3, 4 unit building and you're paying under $500,000 in Los Angeles, where the rents are, for a 2-bedroom, they're going for $2,500 in that neighborhood. That's pretty good. I mean, if you're on a property like that, taking $8 to $10,000 out every month, heck yeah, you can get a loan. And heck yeah, there are loans out there right now which don't even require anything except that the property itself carries the note. Principal, interest, taxes, and insurance. Now that's a great deal. We got a guy coming on the show a little bit later on, Kim Tran from AM West. Been on the show before, and they have programs like this, as do several of the lenders that we have that work with Malibu Funding in the broker side. Malibu Funding, of course, is both a broker and a lender, and it really depends on the situation and also the need of you, the borrower out there, or the person trying to buy that real estate piece. It's important to understand you have choices, shop around, but you want to get into a situation where, 1, you can find somebody who's got a lot of different choices, and 2, also can lend you the money if, in fact, you qualify under their particular guidelines. Most lenders, if you go direct, you're a borrower, right? You're going out there, you're shopping around, you're doing what I've said many times. Take 2 or 3 different, estimates from different lenders, different brokers, different mortgage bankers, and take a look at them, see which ones they are. If you're doing that, understand that a lender has some options, right? But the downside to being the lender is usually you only have 1 or 2 funding sources. And if you are a true lender, i.e. a delegated underwriter, what they call DE, which means that you can sell to another lender or sell direct to Fannie and Freddie, you usually have money. Then you've got to slap your particular margin on top. Then you've got to sell it to the clients, i.e. your account executives go to brokers and try to get them to sign up and use them. So most lenders out there are really competing for a very small margin. If you are a broker, you can shop to many different lenders out there. And the rates being what they are, see, here's how it works. Everybody needs to get paid in the lending business, in the mortgage broker business. If you're a lender, you get to choose your own rate for the client. The downside of that is for the client is they're not sure exactly how much money the broker or lender is making when they sell that loan off. And that is, of course, has nothing to do with what the deal is when they're talking to you, the borrower. If you're a broker, every broker has to have a compensation plan with that lender, which slaps an additional point, 2 point, 2.5 points, up to 3 points on each and every deal. That is disclosed to you. You do see it, but there is no way that you can negotiate for a better rate. So a lot of people looking for, somebody to borrow money from, right? Who do you go to, a lender or a broker? Well, at Malibu Funding, the one good thing I can say about them is they can go both ways. They can be a broker and search for the best rate based on their compensation plans with the 35 lenders they're with, or they can choose their own correspondent channel, use their own money, and fund the deal. There are different ways to go and different options for you, the borrower, and that's an important thing, especially in today's market. I read an interesting article today about today's market, about what's going on in the real estate world and how this time last year we were looking at, about 11% of the buyers involved in multiple offers. Now, you're out there and you're thinking, what are you talking about? I'm involved in a multiple offer right now. Every deal I go in is a multiple offer. Certain markets are different, right? If you are in San Bernardino, Riverside, and I want to say hey to those fine people out there, KCAA, KMET, they bring the show to you each and every Saturday and Sunday, and I really appreciate that. They do a great job, and the people that listen to the show appreciate your calls and appreciate your feedback. Also, up in Tahoe, at K-Tahoe, the great people up there, bringing that show, I guess, Darryl, how long have we been up there? Year?
About a year, yeah.
Yeah, about a year. Okay, that's excellent. So we should have a pretty good, that's a nice echo. That's good. That's excellent. I felt like I was in a stadium doing a stadium show.
I am the mighty wizard of audio.
Do not look behind that curtain. Anyway, so the great people up there in Tahoe, thanks for listening in. Also, each and every week, we do try to bring to you some information, some guests, some people that you may not hear on other shows. This is not necessarily a commercial for Malibu Funding. We try to give you information that you're going to use now, or you're going to sock it away in your memory or write it down so that when you do make that decision to either buy or refinance that house, that'd be a good time to do that. On the refi market, let's talk rates just quickly before we get to the break. There are some interesting trends, I guess, in that particular way. 30-year fixed rate loans, 3.625%. That trend is up, right? Last week we were at about 3.5%, but we've been hovering really from, a little below 3.5% to 3.75% for a good 2-3 weeks now. Since the rates have come down. The FHA VA loan rate is 3.375. The 15-year fixed rate is 3.375. And the 5-year ARM, the ARM product, great product if you got to move within 2 or 3 years, is 3.25%. Now, obviously, every half point, every point is going to give you more borrowing power. And if you're in a situation where you know that your job or you're just one of these people that likes to move every 2 or 3 years or likes to buy something and then, refinance it within that time window because you want to get in at the low introductory rate, which is that 3.1 or 5.1 ARM at 3.25%, and then refinance it into some 30-year fixed rate later. Yeah, all that's available to you. And I think the rates being what they are is still an excellent opportunity for you. The refi business has really exploded in the last 3 weeks because of the rates went down. Obviously, if you bought a year ago at 4.5%, and the rates are now as I said today, 3.625% as an average across the country, you're probably thinking, yeah, I could probably save some money, and how long would it take for me from saving that money to make up what I've already paid in interest payments? Really, it wouldn't be that much. It'd be a pretty good idea to do that. You'd be lowering your interest payments by a lot. You could even look at going from the 30-year to the 15-year and see if you can afford that payment, because I did the 15-year fixed and really liked the product and got out of that loan, and my house is paid off. Now, I had an opportunity to be able to do that. I had a mortgage of about $400,000 and some 16 years ago. My mortgage has been paid off for about a year and a half now. So it's really, a way to look at it if you're looking at rates 30-year versus 15, last year versus this year, and to see if whatever the difference is and if that, in fact, is a way that you want to go. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in. this week and every week. We do miss it when we're not on the air. So, again, thanks very much, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number here. If you pick up the phone and give us a call, leave a message. I will definitely get back to you after the show or sometime tomorrow. Reason is that interrupting the show for some questions about what your specific problem is usually takes time, and a lot of it is very specific to your nature, and there are some confidentiality issues as well. So I will call you back. I will get you to the right person, and if I don't have the answer, I'll find somebody that does. And in a lot of ways, the real estate market is a constantly evolving and changing thing. Everybody knows that, and you need somebody who really knows what the heck they're doing, and I've brought that person to the show. How about that introduction, Robert? Is that good?
Yeah.
Excellent. Okay, this is Robert Perez from Platinum Realty. He's been on the show before. Really appreciate it, and again, thanks for coming on the show.
Great. Thanks for having me on, Jeff. Thanks. It's always a pleasure to come on to your show.
Great. Thank you very much. Okay, give us two things. One, where you're doing it, and what's happening out there.
Well, based out of California, you can sell real estate anywhere in California, but you want to sell where you're mostly at. I have the ability to live in Glendale, and I visit my parents in the city of Banning. I've spoken about Banning before.
Right.
It's about an hour and 40 minutes. From my front door to my parents' front door is an hour and 40 minutes, so I pass a lot of cities. But in the city of Banning, you could still find something for under $200,000, and the rents are anywhere from $1,200 to $1,700 a month. So you got positive cash flow coming in on a lot of these transactions. So that's what I like about those cities right there. If you're a brand new investor, especially if you're a brand new investor, that's a great place to invest. It is positive cash flow.
Let me ask you a question. So, okay, Banning. Now, I've been to Banning. I know the area. I know it's not as far as people think, especially if you live in San Bernardino and Riverside, where the majority of our audience is listening. Give us some examples, not only of houses, house prices, but also lifestyle out there.
So, sorry, there's an ambulance coming by me right now. Hopefully it won't be too loud. But one of the things that are coming up there is the Home Depot, Walmart. One of the things you need to look for is jobs.
Right.
Where are the jobs, and how far do people have to go? So one of the things that I do while I'm shopping for homes is I always ask people, "Hey, where do you work? How long does it take you to get to work?" So Banning is an up and coming area. It's next to the city of Beaumont. It's like the younger cousin, you could say,
right,
of the city of Beaumont. But you can get a house there under $200,000. If you're looking to flip a house, you can get it for under $200,000. Probably put about $25,000 to $30,000 and sell it close to $300,000. You're making a great profit margin in those areas. And if you're looking to relocate, they now have close to properties that we flip. They're getting ready to construct 5,000 homes.
Right.
So it's an up and coming neighborhood. Anybody can call and talk about LA and all that, and then the problem with LA for first time investors is that it's out of reach.
Right.
You need 25% down, or sometimes you can get it with 20% down, but it's a lot of money for these $1 million homes. But out there, with $25,000, $30,000, you can easily flip a house, a 2-bedroom, 1-bath house. You're not going to get rich overnight, but you're definitely going to make a good living. Yeah,
and also with the rates being what they are, having come down since last year by at least a point, really makes it much more affordable.
Jeff, that you hit the nail on the head with that one. That is key. If you're a first-time home buyer, you definitely have to take advantage of today's rate. Yeah, you got to speak to people like yourself and definitely find out. A lot of times where my clients come in, they just tell me what they want to pay a month, and that will determine where I take them. Like this is how much home will buy you on what you're wanting to pay a month, and not what you can pay a month.
What do you find, Robert? What do you find is the biggest impediment to people making the decision to buy? Is it the financial side, or is it just being afraid, or what is it?
I think, there's a lot of answers to that one. It has to do with education, I feel.
Okay.
If your parents were renters, probably you're going to be a renter. It's very hard to break those molds. But I think once you become a homeowner, it's definitely worth it. Not solely for taxes anymore because of the new tax rules, but
Right.
one of the things is nothing gives you money like equity. Your home, it's like planting a seed. You put a seed in today, in 2 or 3 years, your tree's going to grow, and
Right.
eventually it will. You'll get some avocados out of that tree eventually, and you'll make money.
Yeah.
You will make money. So all the money that I get, Jeff, I turn it around and I put it right back into real estate. Money sitting in the bank. Even my son is 12 years old, and one of the questions I always ask him is, especially when I'm walking around with people that I know, I'll say, "Son, what's money that's not being used?" This is a 12-year-old, and he'll say, "Useless." And I think that's, if you're not using your money, if you just have your money sitting there and making your money work for you. So all the money, anytime I get free cash flow of any type, I turn around and I reinvest it into real estate. It's not rocket science. A lot of rich multimillionaires have done that for years, and they continue to make millions because of that. Now, you're talking millions. It doesn't mean that you need millions of dollars to get started.
Right.
You can get started, like I said, in the city of Banning. I love it there. Not only because I have to be there to visit my parents, but I go there because it's a great place to invest, and it turns fast. It's a lot of people can afford to buy a $200,000 house, and only a small percentage of people can buy a multi-million-dollar.
No, I think cities like Banning, the new construction that you're talking about that they're going to put in phases, that California still has opportunity in real estate for beginning investors is an exciting proposition. Now, the question is, can somebody see themselves living in that space, in that area? And you've answered it as well. If there's employment there, if there's something by which you can grow and live and have a life, I would say absolutely. And so absolutely. Why would you spend $400,000 or $500,000 in an area that you're jammed in, that you're sweating about a monthly payment, when you can go to some place, get a really good job, and live in a place where you can afford and maybe take a vacation once a year or do some other things that you could do when you can't do it if you're sweating every month, struggling every month to try to come up with the payment for that mortgage.
That's the key. You don't want to be a slave, and a lot of homeowners say that you don't want to be a slave to your home.
Right.
Or when if you are a homeowner, you think back, when I first got my house, I was paying $1,800 a month, which nowadays it's unheard of.
Right. Right.
So $1,800 a month. How did I do it? But now that's the rent for a 1-bedroom apartment.
That's right.
So you can start out there. You can build your family in one of these up and coming neighborhoods, or you could start there, live there a few years as an investor, or not. You can just rent it out, or you could live there, sell it within 3 years, and come a little closer. It could take you 15 years to end up in LA, but eventually, as you buy and sell property, you're going to make income.
Well, the issue about lifestyle, and maybe in the areas that we're talking about that are actually affordable, in 10, 15, 20 years, it's going to be the place that you want to stay because you've grown roots there and the actual city has grown in and of itself to offer you the kind of things that you really wanted when you first moved there but weren't available. That's what happens in California.
That's correct. And if you think back to a good example of that is the city of Fontana,
right?
The city of Rancho Cucamonga,
all of that,
the city
right.
of Rialto,
right?
Those are cities that people would say, you live all the way out there, and now with the freeway systems that we have, you're just 20, 30 minutes away.
Hey, Rancho,
and that's the same thing that's happening.
You can't get in there for under $500,000. I mean, and that's...
Oh, no, that ship has sailed. Fontana
right.
as well. Fontana was something that you could easily start in, and I think that's what these cities are now becoming. But, the city of Beaumont, the city of Banning are now becoming the, for lack of better words, they're becoming the next Rancho Cucamonga or Fontana.
Hey, Robert, shout out your phone number so people can get a hold of you and maybe take advantage of some of this.
Thanks, Jeff. Yeah, so if you're looking to buy real estate in the city of Banning especially, my name is Robert Perez. I'm with Platinum Realty, and my phone number is 951 area code 538-4148. Call me anytime. There is no silly question. This is what I do every day,
Right.
so call me with anything.
Robert, thanks very much for coming on the show. Once again, always appreciate it.
Thank you, Jeff. Talk to you soon.
Talk to you as well. And that's Robert Perez from Platinum Realty. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number over here. Give us a call, write down a question, call me. I will answer it. I may not answer it right now, but I will get back to you. And if I can't get back to you, I have many different people I know in the industry, as well as at Malibu Funding, the show sponsor here for The Mortgage Voice. My NMLS number is 79620. So if you're out there right now and you're looking for a terrific loan officer or a real estate agent, you can call me. I can get you in touch with some terrific people, as I said. One of the great people that we have had on the show several times, talking about different scenarios for borrowers and different programs that might help you get into that property that you want, especially if you have some issues in determining where you fit in the mortgage world, is Bill Orr. And Bill is joining us now. Bill Orr works for Malibu Funding. And again, he joins us now. Thanks, Bill, for coming on the show.
Hey, Jeff. How you doing? Thanks for having me.
I'm great. And thanks for coming on. Okay, so let's talk about pretty interesting market. Rates are low. Rates are still, they're not as low as they were a couple weeks ago, but they're still pretty low. Give us an idea of what we can expect from rates in the next couple of weeks, and then your, I guess, solution to some of these difficult loans that may be coming your way.
Sure. Well, we're seeing right now, excuse me, I did a little research even this week, that rates are still happening low. Still trending lower.
Right.
What happened is a lot of people may have heard that the Federal Reserve is going to lower interest rates, but what happened was all the lenders throughout the country knew that was going to happen because it was widely publicized everywhere. So they started raising. So basically, interest rates actually went up for a period of time, maybe a week or 10 days leading up to that announcement. So when they started to lower the rates as a result of the announcement of lowering their rates, they were higher than they were before they started, and it took them several weeks to trend down to where they are right now, which is basically about 3.6,
right.
3.5, 3.6 for a 30-year fixed rate mortgage, depending on circumstances. So it was kind of a weird thing. I mean, I know when I first got into the business years ago, I didn't understand how all this worked. Because it's weird. It's like, wait a second, I heard on the radio that rates are going down, but what do you mean they're up? Well, it's just one of the weird things about the industry. But they are coming down right now for people who, if you are looking to refinance, rates are screaming right now in the 3.5, 3.6 range. So I'd encourage you to call me, call Jeff, call your favorite loan officer, but take advantage of those low rates, whatever you do.
Now, let me ask you a question. On rates in general, when we talk about that, we talk about people with 750 FICO scores, 20% down. They get the best possible rate. But what about people who aren't necessarily in that group, or in a group that can't necessarily provide you W-2s on a regular basis? They're self-employed. What are you offering these type of people, and what kind of rates can they expect?
Oh, that's a great question. So, well, I'll answer that in two ways.
Okay.
Number one, for people who can document their income, meaning they have paycheck stubs, W-2s, or tax returns, and they're basically employed by somebody, but if the credit's a little spotty, rates as a whole have come down. Mm-hmm. So even though you don't qualify for 3.7 or 3.6 because of credit score and things like that, and let's talk a little bit about that. A question I get a lot of times: how come my rate is this high? Or I heard rates are lower. How come I'm getting this rate?
Right.
Well, all lenders do something called risk-based pricing. It's RISK, risk-based pricing, and it means what it sounds like. It means the higher the risk, the higher the rate.
Right.
So if somebody's got a credit score of 620 or 630 or 640, it just makes sense they're not going to get the same interest rate as somebody with a credit score of 750 because, frankly, they're higher risk.
Right.
But again, generally speaking, okay, so you don't get 3.5, 3.6, but if you get 4 or 4.1 or 4.2 or 3.8, that's still fantastic.
It's still fantastic.
And we still have a lot of people that we can help with these rates. So that's kind of like the first half of my answer.
Right.
And then the second half of my answer is for people who are self-employed, or they're a sales rep, or they have the type of job where they take a lot of write-offs. And we get this a lot. What do we do with those kind of people? Because let's take for example, a business owner, and maybe his gross income is, $120,000. That's how much his business grosses. But then he takes all his write-offs. He gets together at the end of the year with a CPA or tax preparer, and they come up with all his write-offs. Some of them are real write-offs, and some of them aren't. And now his income only makes $50,000.
Right.
How do we get that person a loan whose tax returns say $50,000, but we all know what's going on? We know they're making a lot more than that. How do we help them? There's a couple ways to do it, and one that I have a client working on right now is with bank statements.
I see.
So somebody who has a business where they really are making good money, whether it's $50,000 or $75,000 or $150,000, usually the bank statements will tell us what's really going on because we're going to see the deposits. So we have a bank statement where we have a loan program. Instead of giving us your paychecks, instead of giving us your W-2s or your tax returns might not show as much because, again, you're writing it off.
Of course.
We're going to say, give me 12 months worth of bank statements, and let's take a look at your deposits. And we can tell by your deposits how much money you're making, and we can issue you a loan based on that. And that's kind of how one of the other solutions would be for people who cannot show what their income really is.
Now, in that risk-based analysis that you talked about with credit score, this would also, I guess, be similar, right? I mean, you're looking at a risk here because of, a lack of W-2. You're looking at bank statements coming in. The rate be higher or the same, lower? Where are you talking about for rates here?
The client I've got right now, her credit score is her middle, there's 3 credit scores out there, and lenders will take the middle of the 3 scores.
Right.
So in her case, she has a 700 credit score, which is good. It's not
good.
Great, but it's good. Certainly good enough to get a decent loan.
Yeah.
And she's going to get a rate of, I think, 5.5, 5.6.
Okay.
And that is certainly better than the alternative, which would be a hard money loan with rates in the 9s, 10s, 11s.
Okay, so on a $100,000 or $200,000 loan bill, if you're looking at a difference between, somebody who has, A paper and the check stubs, the W-2s, to prove their income, their rate being 6%, and the difference between that and the monthly payment of the person who is going to get the same property, same loan, but it's going to pay 5.6% is roughly what, a couple $100 a month?
Yeah, it's not that much. I'll give you an answer right now. Let's just see if we're just real quick down and dirty. We're going to do this live, Jeff. Here we go.
Exactly. Well, yeah. While you're doing that,
I'm a loan officer, so I got my calculator handy.
No, the reason is because people think about that rate and they go, oh my gosh, that rate's so high. But when you really think about it, and basically you are a higher risk. But if you're only paying, a couple $100 more a month, well, the risk here is all on the lender. It's not on you.
Honestly, that's exactly what it is. So I just did a quick estimate of a $400,000 loan.
Right.
And the difference of payment would be roughly $1,825 if you got a rate of 3.6, and about $2,270.
Okay.
For people who can't disclose their income. So,
well, that's a $400,000 loan, right?
That's not bad.
No, it's not bad. And when I asked the question about a $200,000 loan, it'd be half that. So really, what you're looking at is $200 to $400 difference in the payments when really you couldn't get this loan. When did this loan start?
The bank statement programs really became popular probably, I'm going to say, 3 to 5 years ago.
I see.
And banks like the big ones, the retail banks, Chase, Wells Fargo, B of A, they don't offer these.
Right. They don't offer these. Bill, I got about a minute left, and I want people to get a hold of you because the explanations and how you offer service is outstanding. Could you just shout out your phone number for people?
Sure, yes. Again, my name is Bill, and my last name is Orr, O-R-R. And my phone number is 818-406-4744. That's 818-406-4744.
Bill, thank you very much. Great, as always, coming on the show, and we'll do it again soon.
Thanks so much, Jeff.
Thank you very much. That's Bill Orr from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number over here. Pick up the phone, give us a call. We can help you with your problems in the real estate and mortgage industries. The industry changes a lot, and you have to kind of know what's going on to be able to take advantage of it. Good thing here on the show is that we bring good people who do know what's going on. I certainly have been in the business 20 years plus, so I can help you. And if you like what you hear from anybody on the show, you can go to YouTube and watch the show as it is currently configured. We do shoot me talking to the guests who have their picture and nice telephone number there, so you can always get in touch with the guests on the show by just looking at YouTube. My YouTube channel is Jeff Barton, the Mortgage Voice, or the Real Estate Voice, one of those two. Either one. Oh, it's the Mortgage Voice now?
It is the Mortgage Voice now.
Great, we have been replaced. I'm glad, because the Mortgage Voice makes a lot of sense, especially since this is the Mortgage Voice, Anyway, thank you for tuning in. I do appreciate it. One of the guys who is gracious enough to come on the show from AM West Mortgage is Kim Tran, and he joins us now with his experience. Kim, how are you?
Hi, good. Thank you, Jeff. Thanks for having me here, and hello, everyone.
Great. Thank you very much. Okay, so one of the things that I like about your company, AM West, well, first of all, tell us a little bit about the company and yourself, just for those who have not heard you on the radio. Last time you were on was a while back.
Yes. I started out as in the real estate market a while back when I was a young man. Then as I found out that, the big piece to real estate transaction is mortgage, and that's how I got into retail mortgage. And I started out with years back with Wells Fargo Mortgage. Then back in 2000, I got into wholesale lending, where I'm exposed to a lot of the newer programs and all that. Companies I work for, they have been around for a while. The board of directors has been around for a while. The previous lender actually got big to the point where they sold the previous platform to Finance America. Then fast forward 2 years, directors are still young. They started another company, which is MWest. And what I like about them is that not only they provide the regular agency government programs that are offered everywhere, they're very innovative. And I would say that 3 years back, we started with the non-QM product.
Right.
Prior to that, in the market, there's like bank statements program, but we started out with the alternative data, which is very similar to stated. And then later on, we rolled out the no ratio program where you need the job to qualify for loan.
Okay, so you have a lot of innovative products, a lot of innovative services, and AM West is obviously growing. Give us a couple more examples of how you are helping borrowers who don't necessarily fit in a traditional mold.
Sure, yeah. Again, to go back to real fast, we started 3 years ago, with only maybe a couple of states, and now we're in 40 states.
Wow.
So we're growing rapidly, and that means that we're probably doing something right, and our products are welcome. Products that are hot seller for us, I would just narrow down to two. There's actually 5 or 6, but the two that hot selling for us will be we'll call it the alternative income docs.
Okay.
These are for folks who are, example, business owners. Majority of business owner will take advantage when it comes to tax season, tax filing, that they'll write off as much as they can.
Yep.
What happens is that when that comes to needing to get a mortgage loan, on paper it may not look good, but in reality, their business is growing, they're making money, and that's why they keep accumulating assets. And that's one type of loan. We also offer for the self-employed or salary type that are example, truck drivers. It could be a waiter, waitress working at a restaurant. They're getting some income on the cash portion that are not on paper.
Right.
So these, we just qualify them with just a standard written DOE. That these programs does not require us to look at the tax returns. We don't need a transcript. It's just pretty much stated.
Okay, so in a program like that, how do you guarantee for your investors that this isn't just a liar loan? What are some of the safeguards? Because most people who are...
Well,
go ahead.
I'm sorry, yes, go ahead.
No,
Yes,
that's
sorry,
okay.
I kind of jumped the gun here. Yes, that's a big question, the ability to repay. I mean, of course, regulators are watching us as well, and we also want to originate safe loans. Our programs are designed for creditworthiness,
Yeah.
nice, better credit type, credit tiers, money in their accounts, and they just need a little bit help on the income section. We don't just take their stated income blindly. Of course, we go through our QC steps where we verify the income through the written DOE. We also follow with a call, and we have to check that this company exists,
Right.
this ball works there, and we verify that these forms are completed by the employer. And as far as for the self-employed, usually we want the profit and loss. We qualify with profit and loss, 2 years business license, and a CPA letter, mainly stating that they own the business, it's profitable, they own it 100%, and when the CPA or any licensed tax preparer are willing to sign the P&L, we take that as serious numbers. And of course, we do a verbal verification on it. So it wasn't something that they exaggerate and then we take it as no. We go through our own checks and balances.
Well, I like to hear that, and it's interesting that this particular type of loan is it's making a comeback. I've heard that your company does it. I appreciate that they do it because there are a lot of borrowers out there who would not be able to qualify without this type of loan, and obviously the standards that you set are going to safeguard the system. What kind of FICO score are you looking for from this type of borrower, and how much money into the deal would they have to have?
We started out when we started these programs 3 years back. It was very limited, restricted. We wanted 30% down payment, and it was only for owner-occupied properties.
Right.
But since now, fast forward 3 years, the program has expanded to where people are calling us crazy, where we can go as low as 10% down.
Okay.
Of course, you need to have the higher FICO tiers for owner-occupied. Now, on the standard guideline, 20% down can get you up to $1 million loan amount, and with a FICO of 700, actually 720, but we're dropping it. So we're opening up the bucket to fit more borrowers.
Right.
Max loan amount can go up to $5 million, although I have done some by exception, even higher loan amounts, $7 million, $10 million, $15 million cash out.
Wow.
The program has a lot of flexibilities, and by all means, it doesn't mean that we lend blindly. We go through the steps that they have to qualify.
Right. This is all TRID-related loans, right? These are first liens on properties?
Yes, correct. First liens, and it's only 1 to 4 units. We don't do any mixed use or commercial properties. Although the good part about niche is that sometimes you may have a borrower who lives in a county where they don't have high balance loan limits.
Right.
So the purchasing power got limited. Well, ours expanded. There's no county restrictions.
Right.
And we actually have borrowers who qualify this program with full documentation, yet using other features in the program. Example, shorter BK seasoning.
Right.
Back in 2008, there's a lot of good borrowers that got damaged a little bit, and it's easier to forgive. Shorter periods aren't allowed the auto toys.
Yes, this has a lot of flexibility, and I really like the program. Could you give the audience or give the listeners your telephone number, a way to get in touch with you if they wanted to talk to you more about these type of loans?
Sure, yes, please. And my cell number direct, it's 626-378-6999. Or your audience can also reach me by email, and that is kim.tran@amwestfunding.com.
Kim, thank you very much. Just one last quick question. Where do you see it heading in terms of both availability of programs and rates?
You know, as far as the rate, I check with my secondary desk, once in a while. And during this refi boom, a lot of people are scrambling to get things done.
Yep.
But from what I was told, that rates for the conventional government market will stay relatively stable throughout the rest of the year. Now, next year is election year, so that's another.
Yeah, we don't know.
Story.
Nobody knows.
A lot of surprises.
I agree.
And also, Jeff, last month, September, there's National Association Mortgage Show in Vegas.
Yes.
When I was there, we had a booth there, and when I went around, surprisingly, there's a lot more non-QM lenders coming out now.
Oh yeah.
So
I think
everywhere's a little bit different, but all still very attractive.
Kim, thanks very much for coming on the show. I do appreciate it. You've been a great guest, and we'll have you back again soon.
Thank you so much, Jeff.
Thank you very much. Okay.
Have a good day, everyone.
Yes, that's Kim Tran from AM West. I'm Jeff Barton, your host for The Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. Jeff Barton, your voice in the mortgage industry, 888-713-2929. Write that phone number down. Save your questions. Call me after the show. You can even call me and leave a message right now, and I will get back to you as I do each and every week with those questions that do come in. One of the questions that came in last week was about interest rates, where they're going, where they're heading, how long do you think they're going to stay low? I think the question, it's a good question, right? And of course, nobody knows, because tomorrow we could have a political firestorm, or we could have another trade war issue, or we could have a terrorism alert, we could have weather issue. There's so many things that can affect rates. I always like to say, when a question like this is asked, can you look at what you want to do and see yourself in that property and paying whatever it is the rate is today for the next 30 years? Can you see you doing that? Or a better question is, can you see yourself happy in a place that you're going to, spend, $2,400 a month at? Because that's really what it's about. It's your happiness level at what you're about to do. Can you see yourself? Now, obviously, buyers have buyer's remorse, and anybody who's into refinancing because they want to lower their payment, they always want to wait to the lowest possible rate. But I say you got to look at what it is right now, and pulling the trigger on either a loan or a purchase is certainly a personal decision, but I think there are many signs that point to doing it now is better than waiting, because you just don't know. A couple things hitting the news desk today, which I wanted to talk to. We talked to last week about the mortgage-backed securities and the treasuries and how that affects your interest rate and how all of it affects whether it's going to go up or down. Well, there was a big article today by Matthew Graham, who is we've had him on the show. He is, I guess, one of the VPs or the CEO over at Mortgage News Daily, and he was saying that he thinks that the bonds, the mortgage-backed securities, and the treasury bonds are trading off back and forth who's giving you the better deal, better yield, i.e. if you're looking to place your large money into a particular investment vehicle, would you do it into mortgage-backed securities or would you do it into treasury bonds? And because it trades back and forth, whether it's, today it's mortgage-backed securities and tomorrow's treasury bonds, and how that affects the marketplace, well, it does, obviously. And what we've had recently, which doesn't happen a lot, is mortgage-backed securities giving more yield than necessarily treasury bonds. So in the article talking about what's going on in the economy overall, he talked about the unemployment rate and how it's we've had the lowest unemployment rate that we've had in 50 years. And in talking about that, who do we thank for that? Do we thank the fact that we've had really uninterrupted economic prosperity for 11 years, and it's been really fueled in the last 2.5 years by whatever policies are there at the Fed, at the Treasury, and certainly from the White House? And I think people who are in business, and I've talked to many, many people, both in the real estate and mortgage business, as well as industry and certain other businesses. Obviously, the trade war is hurting a lot of businesses. Certainly, the auto workers are not happy because they just can't seem to get a contract with GM, right? But overall, most people would say, yeah, the economy is pretty good. But Daryl, let me ask you a question.
Sure.
If the economy is doing so well, right, a lot of people are working. I think there's always an argument to be made that not enough people are working or not enough type of jobs are out there. However, we have this, as Matthew describes, as the lowest ever. Why don't we have more of a positive feeling about what's happening in the economy, i.e., why doesn't it wash over what's happening politically? Why is that?
Well, first of all, when numbers are given, you have to consider the source, and some people just don't, believe it.
Right.
But there's evidence all around us of a better economy. But it's a state-by-state issue as well.
Absolutely.
California has passed, was about to pass the highest minimum wage law anywhere in the country.
Right.
And the small business owner that employs people,
right,
is they have trouble.
Right.
If everybody's got to make that kind of money coming in, they can't afford to stay in business.
Right.
So, you talked trickle-down theory earlier. This is sort of a burn it from the bottom up theory at the moment. That's there's trouble on the horizon.
Interesting. Yeah, California has they've got a socialist experiment going on, have been for, the last, 30 years, just trying to figure out how we can help everybody. They're talking here, as well as some other states, about a universal health care for the state of California. Certainly the minimum wage law, which was, city by city or county by county, is now
statewide. Yeah,
it's now statewide. Right? Was it $15 an hour by
15 by next year?
Okay. Now I agree. I think people should get paid as much as possible. But I guess what I'm trying to get at here with this argument or this kind of understanding is, why is there so much angst in the country when people seem to be doing well? Why? Politically, really, you're either one side or the other. Is it because social media has really drummed up all this angst and anger against one group versus another group? Is that what it is? What is it?
I don't think that that media, official media,
right,
the news networks really take sides to that extent,
mm-hmm,
right? Social media certainly does.
Well, I think CNN and Fox would be two networks that would be diametrically opposed to one another, and they've chosen a side and a person or persons that they're going to back. And I think that that's probably what raises the angst level. But most people are working. They're buying a new car. They're getting a new mortgage. The mortgage business is booming.
Yeah, if you drive on the freeway like we do in Southern California, right, there are a lot of new cars on the freeway.
There's a lot. That's what I'm saying. So I just, I think it really distracts us from a lot of the things that are taking place, like you were mentioning. The things that can hurt California or hurt Californian economy may be things that people don't pay attention to because things are good, or they're just distracted by what's going on politically, especially if they're plugged into network TV or, social media where they always want to take a stand. I get involved with it a little bit. And the reason I bring this up is because if you're out there and you're trying to make a decision about whether you're going to buy that investment property, or you're out there trying to make a decision whether you want to move to a different area because it's a better house for you, these are the things that affect people on a daily basis. And I'm here to tell you that because of the low rates, don't lose focus on what's important to you. I think a lot of the broader issues are just that. It's like, too big for us. Let's just talk about what I'm doing here. How do I get up every day, take my kids to school? How do I, focus in on making enough money to either make the mortgage payment or save it up a down payment to go get that house? Because real estate, although we have, according to Redfin, 11% of the homes being bought out there are done in multiple offers, that means that, 89% aren't. So there are opportunities in the real estate market right now. And because we have buying power, because the rates are so low, especially since they've dropped a point since last year, this is an opportunity waiting to happen. Shut off the TV, shut off social media, look at the house that you can afford and go get it. It's really a great opportunity. And if all this stuff really comes to fruition and things happen in order to hurt either the real estate market or drive interest rates up, which could easily happen, as I said, you're going to have missed an opportunity. And I think that's what the important thing here is to understand. And having involved myself in all this for years with either the TV show or we talk a little bit about it here, but only in terms of how it affects you as a borrower, how it affects you as a buyer, as a seller. These are the things that are really most important to most people around here, especially in the San Bernardino Riverside area where you probably have most people are two family members working, kids in school, everybody feeling okay about themselves, maybe putting a little savings aside for a rainy day, which is really what's important. Anyway, thanks for listening to the show. Really appreciate it. Daryl, thanks for jumping in a little bit.
Pleasure.
Okay, and I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.